Welcome to my pincast. My goal in this pincast is to use adjusting entries to record depreciation. Let's assume that during the month when we're journalizing things, you sick of this yet? We journalize the purchase of equipment anytime during the month, and this equipment costs $10,000. This is a prepaid item. It's a super prepaid. And I set up an equipment account with $10,000 in it, and I need to make an adjusting entry to write that off over the period benefited. So, here's a picture of where I am on my unadjusted trial balance. I have journalized the transaction during the month. Let's say this happened on December 1st. It's a great day, and we recorded it. Well, the equipment wears out. Let's say this equipment is going to wear out over 5 years. And furthermore, we'll say its useful life to us is 5 years. And furthermore, we think at the end of 5 years it will have a salvage value, that which we'll be able to sell it for, of $1,000. How much of the equipment is used during the month of December? In other words, what might the adjusting entry look like for this? Well, first, let's calculate it. There's a formula, and it's called the formula for straight line depreciation. And the formula says cost, which in our case is $10,000, minus salvage value, $1,000, equals how much we're going to write off, or $9,000. And we're going to write that off for over 5 years, and I'm doing it monthly. So 5 years times 12 equals 60 months. How much will I write off of this equipment monthly for 60 months to write it off? Go ahead and calculate that for me. Put this on pause. What did you get? 9,000 divided by 60 is $150 a month. So we want to depreciate this equipment by $150 a month. So I know my adjusting entry is going to be $150. The debit, and it will be dated December 31st, all adjusting entries dated at the end of the month, will be to debit depreciation expense. But what will the credit be? So we have depreciation expense. You might want to go to equipment, but that would be the wrong answer. You would actually go to an account called accumulated depreciation for equipment. I abbreviated it. That means accumulated depreciation. Accumulated depreciation is a contra account. It's contra to equipment. The definition of a contra is an account, accumulated depreciation, which has the opposite balance of an account it relates to equipment, and it adjusts the balance in that account to a more correct number. So here's our adjusting entry: depreciation expense debit, accumulated depreciation credit, and here's how it would look on the financial statements. If you look at it on the balance, or here's how it would look in the general ledger. This would be the adjusting entry. So after you make that adjusting entry, you would post the adjusting entry in the general journal. We've just made it. And you would post that to the general ledger, and it would look like we have right here. And then you would have information on your adjusted trial balance for these accounts, and you could make financial statements for it. I want to look at how accumulated depreciation will look on the balance sheet. It will be shown under property, plant, and equipment, a category on the balance sheet, and it will show equipment at a cost of $10,000, and accumulated depreciation to date. Oh, I put too many zeros on that, I'm sorry. At $10,000, let's clean that up for you. An accumulated depreciation of $150, So that would be $9,850. This is called its book value, though they often don't actually type the words book value on a balance sheet. They just put the amount down. And this is what it would look like after 1 month's depreciation. You can answer the question, how much equipment does this business own? $10,000. How much has been written off so far? $150. How much is left to write off? $9,850. And you would continue to make this entry every month. So this would be for December, and then I'm adding some for January, and I'm adding some for February. So accumulated depreciation continually picks up the amount that would be an accumulated depreciation at the end of the period. Let's do a balance sheet after 1 year. What would it look like? Well, it would still be under property, plant, and equipment. That's where it lives. And the balance in equipment would still be $10,000. That's how much you put in it. But at the end of a year, accumulated depreciation would be 150 times 12, because you would have done that entry 12 times up here. 150 times 12, you can hear me do it, would be $1,800 accumulated depreciation. And the book value of this equipment at this time would be the difference, or $8,200. Now I could say to you, how much equipment do you own? And you could say, well, it's still $10,000. Accumulated depreciation is now $1,800, and I have $8,200 left in a book value or basis left to write off. How much it costs me, how much has been written off to date, and how much is still on the books is always available to financial statement readers on the balance sheet, because we haven't taken depreciation expense directly against the equipment account. It goes into the accumulated account. So you learned something new in this chapter besides adjusting entries. You learned about contra accounts. This type of adjusting entry is for sure prepaid. It's just a super prepaid. And it has some internal control issues. It's a super long time. We need to keep track of what we own, or we won't own it very long. It's kind of the nature of the game. So we record it into equipment, and then we depreciate it into a contra account. And the contra account is shown right here, shown contra to equipment. Contra account, again, is an account that has an opposite balance of the account that it relates to, and it is applied against that account to show a more accurate balance. In this case, $8,200 is the accurate balance. It's the amount that's left to be written off in the future. Hey, thanks for joining me on this discussion, finishing up our talk on adjusting entries. We've looked at prepaids, both expenses and revenues, and depreciation, which is really just another expense. And we've looked at accrued items, both expenses and revenue. So we have covered all of these in the Pincast, and hopefully you're feeling confident about how to record adjusting entries. That's it. Thanks for joining me for my chat on adjusting entries.